And, if a major government wants to start adding lots of silver, meaningful amounts of silver to its reserves, silver is a tiny little market. And it's so thinly traded that an entity like Russia could make a huge difference in the amount of silver that's being taken off the market and what that does to the price and how close it brings us to panic buying in the silver market. They're or another term is whales. There are whales in this market that didn't used to be there, and it's the central banks. So the gold and silver market has a lot of new capital flowing in, and a lot of it's coming from central banks that just make it up out of thin air. So they have unlimited amounts of cash to throw at precious metals as they want to, if they want to, and that's partly why gold is up so much in the last couple of years, because central banks have been buying 1,000 tons a year for the last 2 years, and they're not really done, it doesn't look like. So, and now they're stepping into the silver market. Russia just announced that they added silver to their precious metals strategic reserve. And, if a major government wants to start adding lots of silver, meaningful amounts of silver to its reserves, silver is a tiny little market. And it's so thinly traded that an entity like Russia could make a huge difference in the amount of silver that's being taken off the market and what that does to the price and how close it brings us to panic buying in the silver market, because silver is already in deficit. In other words, we're using up more silver for solar panels and military tech and lots of other things than the world's mines are producing. Nothing. Well, the specter of the Hunt brothers, who I think went to jail for trying to do something like that back in the 1970s, but nothing financial is stopping him. So let's say Elon Musk decided he wanted to buy $10 billion worth of silver. He could do that with a mouse click, and that would move the market, And let's say, well, India is already buying much more than that of new silver each year because they want to build up a solar panel industry, and you need a lot of silver for that. Or let's say the auto industry decides that it's going electric, and it needs a certain amount of silver for its electric cars, and it doesn't want to be left without that silver, so it's stockpiling. Well, something as big as the auto industry could totally move the price of silver if they decide, they want 1,000 tons of silver, and they'll pay whatever they have to pay to get it because that's the board has decided that that's the target for the amount of silver they need in their reserves. Then huge difference, And silver has gapped up in the past. In the late 1970s, silver went from a few tens of dollars to $50 in basically no time flat. Silver in the 2000s went from a few bucks an ounce to $50 an ounce again. It has happened in the past when hot money starts flowing into that sector. So I think it could easily happen this time around, with the big difference being that the industrial demand is huge right now. It's much bigger than it ever used to be. And solar panels aren't going to go anywhere. The next generation of solar panels use more silver than the previous generation do. Military tech, silver does things in missiles that really nothing else can do. So I don't think the demand for silver has ever has kind of a downward spike in the near future. It doesn't just drop dramatically for no apparent reason because some industry changed its tech. I think it's kind of baked in the cake that industrial demand will be pretty strong for a while, and then let investment demand go way up because people panic about the currency and they decide they want silver instead of gold because silver is relatively cheap, and that might be the thing that does it. So we could easily see silver start behaving like Bitcoin in the not too distant future. Well, I think that if you just look at the gold chart, for instance, it was due for a correction because it had such a nice run. But I think going into the election, there was people who understood what was happening were worried about the end of the United States as we know it. 4 more years of the policies of the last 4 years would have another 10 million people come across the border, with half of them being military-age men who are completely unvetted, and another two or three proxy wars out there, any one of which could turn into a shooting war with a major nuclear power, and kind of a quasi-dictatorship where the government felt free to censor previously protected speech. We were turning into a country that we wouldn't even recognize anymore. And I think buying gold was one of the responses to that. I think people were just spooked by what was happening. And that added to the demand for gold, which added to the price action for gold. But the way the election worked out was a landslide in favor of people who were promising to fix a lot of that stuff that was spooking people. So there was probably relief selling on the part of a lot of people who were like, oh, okay, well, we don't have to worry about this, this, and this as much as we used to. So we don't need as much gold as we used to need. And now what's happening, as we're speaking today, gold and silver are both up pretty nicely. And I think that's because people have looked at the world and they thought, okay, maybe we don't have to deal with a nuclear war after all, or a dictatorship, but that financial crisis is still out there, and we do need to own lots of gold and silver, because we're still going to have inflation followed by financial turmoil, followed by some kind of currency reset. Those things are still out there waiting to happen, because Trump is an easy money guy. So not only isn't he promising that we're going to jack up interest rates and go back to strong dollar policy, he's promising the opposite. So that could account for today's action in precious metals, where people are like, okay, we don't have to worry about this, but we still have to worry about that. And we need gold and silver to protect us. So, which is, as I said really long-windedly before, that's kind of my take, is that, okay, the other stuff might get fixed, but $35 trillion of debt going up by $1 or $2 trillion a year, and interest cost on that debt of $1.6 trillion heading for $2 trillion, that's unfixable. And so we should be investing accordingly if we've got this big unfixable thing waiting to happen out there. I actually thought that 2007, 2008, 2009 was the end of the road, So I don't really have credibility with short-term timing questions. So, but I will say that one of the things that we should look for, and which is already happening, is when governments have accumulated enough debt that their interest costs start to spike, if interest rates even go up a little bit. And the US and parts of Europe and Japan are all in danger of national bankruptcy with the way interest rates are spiking. And what that means is that we've lost a tool for controlling inflation. We can never again raise interest rates in order to stop inflation from accelerating. Yeah. And so we're kind of at, you could call that a kind of a financial death spiral, where we're at the point where interest is just spiking, which that interest is borrowed, which means debt is then spiking, which spikes interest even more. Inflation necessarily flows from that, but the Fed can no longer raise interest rates to stop that inflation. And so once people figure that out, it kind of looks like we're setting the stage for, if not runaway inflation, at least accelerating inflation from here that can't be stopped. And I think that would be the end for the fiat currencies if we hit that point, because everybody would realize there's no fix for this, So we need to start managing our money as if there's no fix. In other words, not looking at, okay, how will the government save us from this, when, we realize the government cannot save us. So I think it's a decent chance that, in other words, that we're there, that we are right at the end of the fiat currency experiment, and that we should start behaving accordingly. And I feel like I can say that about gold. Gold is historically the world's money. Central banks are just buying the hell out of it right now. And which is evidence that they're preparing for the potential of a gold standard going forward. And so I can say that with certainty, because it's understandable and it's happening, And I think there's always going to be a place for physical money which is why I'm very comfortable saying, yeah, own a lot of gold and silver coins and bars and, diversify where you put them all, but make sure they're physical. I think that's good advice because I think physical money will never go out of style because there's always a place for physical assets. And so the stackers right now, maybe they want to have some Bitcoin as well, and I wouldn't argue with that. But I definitely think gold and silver should be, at or near the core of your financial life going forward in this kind of a world.
Summary. In his analysis of global economic trends, John Rubino offers a compelling perspective on investment strategies, emphasizing the importance of diversification and physical assets during uncertain times. Rubino highlights that the silver market is particularly vulnerable to supply constraints, with current industrial demand already outpacing mine production. The market is in deficit, meaning more silver is being consumed by solar panels, military technology, and other industries than is being produced. This scarcity creates a compelling argument for investors to focus on tangible assets that can preserve value during potential currency challenges. Drawing from his deep understanding of market dynamics, Rubino underscores the critical importance of comprehending emerging market trends, particularly in commodities like silver. He points out that industries such as solar panel production, military technology, and electric vehicle manufacturing are creating significant and potentially increasing demand for silver. The market is so thin that major players like central banks or large industries could dramatically impact prices. Investors should, as Rubino suggests, look beyond short-term price fluctuations and consider long-term industrial trends that could drive commodity values, especially given silver's current industrial demand deficit. Rubino's most profound insight lies in preparing for potential systemic financial changes. He warns of the potential end of the fiat currency experiment, characterized by massive government debt, rising interest costs, and the inability to control inflation through traditional monetary policy. Central banks are already making strategic moves into precious metals, with some adding silver to their reserves. The lesson, according to Rubino, is to invest with a mindset of systemic change, considering assets that can provide protection during potential economic disruptions. This means looking beyond traditional investment strategies and being prepared for scenarios where conventional financial tools might become less effective.